very good morning to one and all present here. Myself, Ani Sultana, working as Assistant Professor in the Department of Management Studies, SNS College of Technology. Today, as a part of lecture series, I am going to present a topic on financial markets and services. Like this is the elective paper which comes under the specialization of finance. For example, if we opt specialization finance, we have namely 4 electives. Like we'll be studying 3 elective papers in third semester and 1 elective paper in the fourth semester. So as I'm going to handle for this subject in third semester for finance specialization students, let me have a presentation on this topic. See, last topic, it is the very first topic about the about this unit is like first unit is on like commercial banking services. So the first topic is about loans. See, we know what is loan. Like we are borrowing in need of some money, which will be repaid in the specified time, and during the time we'll pay the interest for the amount which we have borrowed from the principal amount which we have borrowed from either the banks or any other financial institutions. Like in the first unit, we are going to study the commercial bank services and what are the types of loans and credit facilities offered by the bank. The very first topic talks about the personal loan. So first of all, we have come across the loan, and next it is like types of loan. Like types of loan, like normally we call it as like personal loans and mortgage loans. Personal loans, like for example we can say like housing loan, vehicle or car loan, and all other things, education loan, etc. will come under the personal loans. Whereas the mortgage loan speaks about the business. Suppose if you are starting a startup, or suppose if you are running a existing business, and if you need any suppose if you are facing any shortage of money, on that time we will borrow, we will be in need of money, right? So we'll be borrowing from any other financial institutions or banks. Like there is a term called business loan or mortgage loans, which is offered to the individuals beyond the period. For example, like a long term loan, normally the loan period will exceed up to 5 years. So if it is like a long term loan, for example, if it is taking to 10 years or 12 years or 15 years, so this will call it as the long term loans. See, if we look at the picture, the as a student's point of view, we can guess the topic. See, like there is a people in the a person in the a person in the second picture demonstrates that a small house and with the money and the key. So, and the next picture which tells about the application, the loan application. So what are the things you have to be filled, like your KYC, know your client, all the details has to be filled. So if we look into this picture, we can clearly say that this is the topic we are going to see. So again the recap, we have seen the loans. So what is typically a loan? We have seen the definition and what is the need for the loan, etc. So normally there are a broad classification. We say like broad classification of loans may be like secured and unsecured loans. See, like what is a secured loan? Like if the borrower, we are borrowing from the bank or any institution where the bank, we have to submit any collateral, like we have to submit any security on behalf of, like we are like suppose we are paying the interest in installments over a period of time. For example, if you are 5 years, we have taken a loan at 8.5 interest, we will be paying the principal plus interest on the certain over the 60 months, 5 years. For the period of 60 months, we will be paying the loan amount, that is equated monthly installments, that is we call it as EMI. So whereas the secured loan talks about the collateral, unsecured loan which talks about the, like we don't expect any collateral or any security from the borrower. So the who is borrowing the money, we are not expecting any collateral. Okay, where this normally it will happen, See, before we are considering those factors, so what are the parameters of personal loans? Initially, when we hear a topic like loans, what is the first thing which will come in our mind is that the what type of loan we need for our, what is the purpose to be defined. So, in order to define the purpose, we need to know what is the type of loan we are going to take. Next is prerequisites for the application of loan. So what are the things which is required to apply for the loan? So if I am eligible, simply I am sitting at home, and if I am need 5 lakh or 10 lakhs of rupees, no, that is not the right thing to approach for the loan. I should either my income or my family income should meet the EMI, to meet the EMI to be paid in the EMI to be paid. So these are the prerequisites. And what is the eligibility? See, how much of eligibility? Suppose for example I am earning 50k. So based on the my income, the banks will have certain calculations, and based on that, like for example, normally in India, previously, like a decade ago, we used to save 10%, 20% of our income will be saved, taken to savings, but now it is limited to 2 to 3%. So the bank will have a calculation on what amount of savings and what amount of expenses, and based on that it will offer you a loan. For example, if I am asking for a 10 lakh of rupees, not this same amount will be given, but based on our income and other collateral or other security things, the amount will be that it will be decided with the bank, and the other parameters will be discussed, and only that amount will be given as a loan amount. So what are the advantages? See, like if you are taking a loan, see, even now we have an option for credit cards, but if we go for a credit card, we have a higher interest when it is compared to the personal loans. On the other hand, sometimes, for example, for personal loans there will be no collateral will be needed, but the credit card comes under the unsecured loans, which has to be backed by any collateral, etc. So we need to understand a clear understanding about what is a secured and unsecured. So what are the disadvantages of secured loan? Like risk of losing collateral, maybe our security, if we regret to pay the amount, EMI or some amount, our collateral will be seized, and potential for over borrowing, we may over borrow to compensate this loan amount. So these many factors are there in the like a